Okay, folks, welcome to the member stock pick request. This is where we review stock symbols that our members are interested in. Part of the service that we provide here is basically a second opinion or a trade coach where we review the quality of the trade that our members are looking to put on, and we do it on video, and it's pretty in-depth and in detail. So if you want to get these videos in the future, please, if you're watching this on StockTwitch or Twitter, follow me on those networks. If you're watching this on YouTube, subscribe to my channel. If you're watching this on my website, please enter your email address. You'll be alerted to these videos in the future, and you will not be spammed. We hate spam too. Let's get to it. The first stock up, this is actually an ETF, is from fellow member ZEUS. He's interested in the DBC, the DB Commodities Tracking Fund. It's a commodities fund. It's an ETF. Now, what I did here is I overlaid in green the US dollar, because whenever you're speaking about or thinking about putting on a trade in commodities, you always want to pay attention to the strength of the US dollar and the correlation of the individual commodity, or in this case, a fund, relative to the US dollar. You want to see whether or not it trades inversely of the US dollar, whether it has a partial correlation, or whether it is a complete inverse correlation. So very, very critical before you even think about stepping in the ring with trading commodities. Now, if you're thinking about trading gold, gold has a direct inverse correlation with the US dollar. As goes the US dollar, so goes gold in the opposite direction, the vast majority of times. And as you could see here with the DBC, as the US dollar corrects, the DBC rallies. And it's generally rare that they trade in tandem. Back in 2010, the US dollar rallied, DBC corrected. And it's rare to find where they've traded in tandem together at any point in time in history, maybe for a few days or maybe a week or so, not much beyond there. And when you're taking a look at this chart here, weekly chart DBC, we are trading at the lower band of the, let's not say a downtrend or an uptrend, let's call it a consolidation. So we're trading at that lower band, and ideally that's been a great time to buy the DBC. But if you note, the US dollar of late has been breaking out, and it broke out most recently above 81.50, a very, very critical resistance level. So the probability of the US dollar continuing higher is fairly good. That means that the probability of the DBC either holding water or trending down is fairly good. Now, next week on a daily basis, let's go to that daily chart. Now, taking a look at the DBC on a daily basis, now if the US dollar begins to pull back, then you could consider opening up a position on the DBC. However, I would caution against it for the simple reason being this, one of two things. One, you have the 50-day moving average, which will, absent an act of God, cross below the 200-day moving average. This short-term rally here off of 2470 is at risk. The probability of it pulling back and at a bare minimum putting in a higher low or retesting 2470 is very, very good. So I would not open up a position on DBC early next week because besides the fact that we have this crossover, we are at resistance. Note you have topping tails flashed on Friday, topping tails seen back on August the 15th, and resistance or a pivot point back here in February of 2014. So this resistance level has some history, and right now I don't think it has the strength to just go bursting through it. I would avoid, allow for a pullback, let the 50-day cross below the 200-day moving average. We can revisit it at that point in time. ZEUS, I would just keep this one on the ticker cloud if you want me to take a look at it later in the week. Next stock up is for Medi, LCI weekly chart. I always like to tell our members that the markets send us signals. And you could tell that it was time to plan your exit strategy out of LCI on several different occasions. One was back here where you started flashing topping tails with an RSI at almost 85. And if you didn't and you just wanted to use a stop loss right below this bottoming tail here, last seen on February the 24th, that would have been a great exit strategy because the stock dropped precipitously to the lower band of the rising uptrend channel shortly thereafter. It found support, rallied up to 51.66, but the caution flag was on the track, even though we made a new higher high, because the RSI was failing to confirm or make new highs. It also flashed a topping tail, a sign of sellers above, putting it a double top on RSI. Again, right where you had your resistance level back in March is where you wanted to put your stop loss order. Had you followed that rule, you would have been spared a really bad decline in the stock. So the markets send us signals. I don't want to hear all the time that the Wall Street is crooked, all the algorithms this, and traders with their inside information that. No. The markets send us signals. If you pay attention to the signals, whether you're looking to get long or short, you'll do fine in this market. So what's the weekly chart telling us now? Call me out. What's the market telling us? The market is telling us right now that this support level at 33.51 is really, really being threatened right now because we rallied off of this level right up to the upper band of the declining downtrend channel and failed. We were rebuffed, and we sold off last week to about 3/4 of the move lower. I'm not going to be a bit surprised to see next week if we break down and put in a new weekly low. If we close down below 33.51, it's all over for LCI. It'll pull back to 29.12. Why am I so bearish on this name right now on a weekly basis? It's because I'm looking at the volume. Volume matters, folks. This is institutional distribution. Note the big down volume bars in recent weeks relative to the very small up volume bars. Now, if I would have seen these type of volume bars back here, I would have a little bit more of a different tone. But when I see volume action coincide with this price action and being at the doorstep of a new downtrend on a weekly basis, we need to be very, very cautious in our tone. Let's go to a daily chart. All right, so daily chart, we are at the lower band of the rising uptrend channel on RSI. The 50-day moving average is now beginning to pick up speed, momentum to the downside. We are holding support at 35.03. If you're looking at, no matter what, you're going to buy this stock on Monday and you're just looking for a stop loss order on a close below 35.03, this support level here in blue, I would be out. I would not even use 33.51 because the weekly chart is just so bearish. Also, you could take a look that you're setting up for a head and shoulder setup. Left shoulder, head, right shoulder. Here's your neckline. Where's that neckline? Right at 35.03. Very light volume to the upside, despite the fact that this is a beautiful key reversal on Friday. Probably shorts covering ahead of the weekend. Traders looking to go out to the Hamptons. They don't want to be worried about the stock. They'll just open up a new short position on Monday morning. No big deal. Ultimate oscillator, holding support. Possible double bottom setup here. I doubt it though. So once again, if you can open up this position, fine. It's okay to speculate, folks. Just have an exit strategy. That exit strategy needs to be right below 35.03 on a closing basis. And are there catalysts to propel this stock higher? Sure. You have a few days worth of short covering potential on the name. Not enough to get me excited. Now, if we had RSI below 20 like you had back here and you had such big short interest, well, then I would entertain a trade because the risk to reward would have been in our favor. And you could see if we had followed our general strategy of trading extreme oversold stocks, entered here, well, then we would have made a handsome profit. This hollow candlestick would have had me out. Next stock up for Medi. I know you've been following this one for a long time, Medi. This one is BKYI. You asked for this one several months ago. All right, so daily chart, beautiful, beautiful price action on Friday. After you saw a huge, huge bottoming tail off the lows on Thursday. Very, very strong. It recaptured 12 cents per share, which is now critical support. The fact that it managed to close above 12 cents speaks volumes about the support level. Very, very important because it showed that we had buyers at this level back in October of 2013. So the people that saw value back here are still around, and they came back in and they bid the stock back up. Now your ADX line is at extreme overbought levels, which is good. You're also putting in a double bottom setup and a higher low on slow stochastic. Double bottom setup, higher lows on Williams percentage R. So I like BKYI. It's looking pretty good. And you can see how critical 12 cents is, and right below there was 10 cents per share. And 10 cents per share had been very, very key support and resistance many times in the past. And this is the value of multi-period charting. Because if you're looking at just the daily chart, and you saw that it broke down below 12 cents, and you just said, I'm going to throw my hands up, and you didn't pay attention to the weekly charts and identify the fact that, you know what, it broke 12. I may be able to get this thing at 10 cents per share, where we know there was support back in January of 2013 when it acted as resistance, broke through, pulled back, retested it, not once, but twice. It also acted as resistance back in 2012 on several occasions. So very, very good support level. I like it at 10 cents per share. I still like it at 12 cents per share. Good stock on both a daily and a weekly chart. Huge, huge, huge capitulation selling. So BKYI looking pretty good. And there is no short squeeze potential as a catalyst here, folks. So just be forewarned. Next stock up is for fellow member ZEUS, IVAN weekly chart. This one I like. We are trading at the lower band of the declining downtrend channel, weekly basis, very, very powerful setup. We are setting up for a double bottom setup off of the support level. My intuition tells me that we have a rally potential up to $2.45 or up it into $3.12, which coincides with the upper band of the declining downtrend channel. Note the strong down volume bar last week. However, week over week, not much in terms of price change. Yes, a down week, but this tells me that there's a lot of indecision with IVAN. So strong down volume, yet little net price change week over week. And yes, down big on a percentage basis, but down only 6 cents on a week over week basis. Let's take a look at a daily chart. All right, so nice little double bottom, bottomed out at 1.29, rallied up to the upper band, pulled back, higher low. Now we're trying to take out this upper band. Good volume on the 18th and on the 22nd. We have broken out on Stoch RSI on a daily basis. We put in a higher high. And folks, we may be trading some of these. I'm not going to come out and say which ones we're going to definitely trade. We have a 14-day free trial offer if you want to sign up and see which ones we're going to trade. IVAN is looking interesting. We have oscillator action leading price performance on RSI. We're breaking out of this secondary downtrend line. So IVAN is looking pretty good. Do we have a potential catalyst for this stock heading higher? Yes, we do. I will discuss that with members. I'll send out a note or post it on the members dashboard this afternoon. Okay, next stock up for fellow member ZEUS, USU. I did a little bit of research on this one because I saw this volatility, and we have ongoing concern issues with this name. However, if you're intent on trading this name, no matter what, let's go through it. Weekly chart. Possible double bottom setup above the 50 level, bullish. We are putting in higher lows on price, resistance at the secondary downtrend line. You would need to watch for a close above the secondary downtrend line. This is your primary, this is your secondary downtrend line, and then the 3-day rule goes into effect. The 3-day rule for non-members, that rule dictates that the stock must trade and close above this breakout point for 3 consecutive days. So I wouldn't touch it until either A, we got to pull back to 4.35, or a breakout and the 3-day rule is successfully passed. Possible double bottom setup on Stoch RSI. The slow Stokes possibly getting ready to hook back up. That's the weekly chart. Daily chart, very similar to the weekly chart. Possible loop up on slow Stokes. Again, you could draw your trend line down here. Your secondary downtrend line, same rule goes into effect. It needs to trade for 3 consecutive days above that declining downtrend line. So while the chart looks interesting, especially with the 50-day moving average crossing above the 200-day moving average, that's a bullish event. Folks, you have ongoing concern issues here, so just be forewarned. And you may think that with this type of volatility, there are a ton of shorts in this name to propel the stock higher on a short squeeze. There are not. Relative to the daily moving average over 3 months, the number of shorts in this name are quite low. Although it looks like a big number, when you take a look at the number of shares short, it's not relative to the 3-month average daily volume. Don't get baited into that trap. TVIX weekly chart, holding support at the lower band of the secondary downtrend channel. We're trading above 50 on Stochc RSI. Watch for a loop back up. Possible double bottom setup and a loop back up on Ultimate Oscillator. The TVIX, folks, is the velocity iShares daily, 2 times move the VIX. It's a leveraged ETF, very, very volatile. Not for the faint of heart. Daily chart TVIX, it needs to hold 2.60, topping tail on Friday. I thought it would close higher. It failed to do so. Resistance at 2.75. The one bullish observation I'll make here is that despite the fact that we put in a new all-time low last week, the RSI is not confirming that move lower. In fact, it's hovering right at, say, 38 on RSI and possibly putting in a double bottom setup. And that's just possibly, folks. Other than that, I don't see anything bullish. Let's check out a 30-minute chart. Okay, 30-minute chart, nothing to write home about here. We rallied the morning of the 22nd, pulled back. We held the lows of the day to the penny. So perhaps setting up for a double bottom setup. Too short of a duration to make that determination. This is acting as good support, though, 2.62. And when you take a look at the S&P 500, folks, yes, we made all-time highs last week, but we failed to hold. And I warned our members early last week, watch the volume. Volume matters. We're breaking out to all-time highs, yet there's no volume. So let's not get overly long of this market. And in fact, we are looking to add to our short positions. That being said, when I point out that volume is dropping off to the upside, down volume on Friday was fairly weak as well. So by no stretch of the imagination am I advocating that everybody go jumping in short of the market on Monday, because markets generally just don't go straight down, especially after you put in a new high. And then the other reason why you need to be so careful when you have a market that's breaking out to all-time highs is this. There's no overhead supply above. There are no sellers above that are looking to get made whole. I call it clear blue skies. No overhead supply. The best environment for any index or stock to be in when you're long. Last week, I pointed out to members the price action on an intraday chart, in particular the 30-minute chart. This is a 1-month 30-minute chart of the SPY, spiders. And you could see that whenever you have choppy action, like you did back here in late July, and like we're seeing right now, it's not good for the markets, because back in July when that started, we began a correction. Now we're seeing the same type of price action again. However, we're making new highs, all-time highs, yet the Stochc RSI is breaking down, putting in lower highs. Take a look at, let's do a price overlay. Here you have it. Stochc RSI overlaid over price, S&P 500, 30-minute chart. So we're putting in lower highs. You could draw your trend line down on the Stochc RSI. Yet the price of the S&P 500 continues to move higher on declining up volume. Never ever good. RSI rolling over, putting in lower highs. So this is not a pretty chart. Lower highs on the slow Stokes. Lower highs on Williams percentage R. So again, folks, I'm not saying go short the market on Monday morning. Again, there is no overhead supply above to act as resistance. So if they spike the market on Monday, I'm not going to be the guy that's going to say go short the market. No way. I'll wait until the markets send us a signal. And on the 30-minute chart, I can tell you on Friday morning when I sent out this chart to members, the markets were sending us a signal. It was no shock that the markets were down. So watch for this type of price action to follow through to a daily chart. And then you're going to have some real serious problems. Last stock up is for fellow member Bob. Tesla, weekly chart. We are trading at the upper band of the rising uptrend channel. We backed off of that level. Now note that we were able to put in a new all-time intraday high, but we failed to close there. We sold off as we hit the upper band of the rising uptrend channel. And as we are beginning to break out to new highs on Tesla, at least on an intraday basis, you're seeing RSI on a weekly basis put in lower highs. That's a little bit of a divergence, and it's just a watch out. That can correct itself if we break out on price. Sure, we could break out on RSI as well, but just a little bit of a watch out. If we continue to see more weakness on Tesla and you see a breakdown on RSI, then you may really want to either A, begin to start booking profits on your longs, or B, begin adding to your short position. Now, would I open up a short position on Monday? No. Daily chart, good price action on Friday, key reversal off of the 2.51 level. This is good support. It acted as resistance back here, and now it is acting as support. A healthy stock, that's what you want to see. Prior resistance, now acting as support. It acted as support back here as well in March of 2014 and eventually broke down. We shorted it back here, and we made a quick profit. We didn't take all this profit, just made a quick swing trade profit, moved to the sidelines. Up volume, very, very weak on Friday. Clear sign that we had some shorts covering. We may loop back up on slow stochastics, but as of right now, both lines are trading down. Let's take a look at the intraday chart. And here you can see good support, 2.51 again. We rallied through resistance. So I think that the path of least resistance on Monday morning is to the upside. I would be watching the price and volume action into the close. If you have declining up volume and we're selling off the day's highs, well, then that might be a sign to either A, open up a short position, or B, add to short positions. And for those considering opening up a short position, there are a large number of shorts in this name. There are a ton of shorts that always believe that they're going to get this one right, but many times they're weak-handed and they cover real quick. So the potential for a short squeeze is here, and that's a multi-day short squeeze. So just be forewarned. And that's it, folks. If you watch this on the website, please enter your email address. You get these videos in the future. You will not be spammed. We hate spam too. If you're watching this on Stock Twitch or Twitter, please follow me there. And if you're watching this on YouTube, subscribe to my channel. Everybody have a profitable trading week, and I'll talk to you soon. Be well.